Well, let's go to the edge of the trading floor in Chicago at the CME Group. It's Scott Geekus with Walsh Trading here with us. All right, Scott, first of all, I want to go down this road of where the options stand right now. Now that we've got the world supply and demand numbers behind us, we're seeing this little bit of quite a big jump over here in the corn market. We're gotten back above that 450, 454 level. What's the options market telling us?
Well, with the option market, you got to remember, so the volatility remains extremely high going to any type of unknown factor, any type of report, or any type of news that is expected to come out. So after that report, you've seen the option volatility come crashing down, which is expected. It's doing exactly what it's supposed to do. So the options right now, the option flow, you're seeing a lot of people just unwinding their option positions, whether it was either selling options or buying them for protection. Either way, the volume right now is pretty much light, but the option volatility did exactly what it was expected. It's coming crashing in after that report. As soon as that unknown factor becomes known, that's usually what happens as designed. So right now, as far as direction, the options are just unwinding positions and not really giving us too much direction, especially after the report. Now, the interesting about that report is with the corn market in particular, obviously the market is not following suit. It didn't believe the report. So that report came out slightly bearish, obviously, with the big jump yesterday, the follow through yet today, with the upside movement now. So now there's a lot of talk about $5 corn again. So whether or not that is going to hold true, we still have a little bit of a hurdle to get through. If we can get through that 460 line, there's really not too much doubt in many traders' minds that we're going to hit that $5 mark soon.
Wow, 460, the line in the sand here. Pretty interesting. Okay, so where does this leave technical traders then? Because this looks like it's become more of a fundamentally based market.
Yeah, well, that's the thing, and you got to remember, so we had the numbers out from the last USDA, which no one bought into. Clearly, right now, everyone's having a hard time believing anything that's coming out. The numbers are just pretty much all over the place, not as expected, especially when you're looking at the yield levels. 48.5 for soybeans seems a little bit optimistic. 166 for corn seems a little bit optimistic. But everyone knew that this report wasn't going to hold too much weight. The big report is going to be what is going to really come out in August, see how those numbers really play out.
When you're talking to other traders there on the floor, has anybody said much about being surprised by what USDA said about the wheat?
Well, yeah, that's the other thing. With the wheat market, you got to remember. So if you're looking at the report, it's two-sided markets, right? So they're saying that the production was a little bit lower, but they're also saying that there's going to be an increase in production. So, I mean, the USDA is talking out of both sides of their mouths again. So it's really hard to disseminate and describe what is really going on. Some of the traders are just flabbergasted about some of these numbers. Other traders are as expected. But that's why the market is the market. You have two-sided action all the time. So we have yet to wait and see what's really going to happen.
All right, Scott, we're going to take a break. And when we come back, we've seen a two-sided trade in this live cattle market. We'll see which direction it's going next. Stay with us here on the Marketing Report. We'll hold up here for just a moment and get Scott's reaction to this cattle market here today. The live cattle market kind of acted like it wanted to drift a little bit lower earlier, Scott, but then found a little bit of strength. Is that strength based on cash?
It could be a little. There's a lot of different factors when you're looking at the cattle market. So yes, the cash is definitely a factor. Short-term demand concerns a little bit, but now you're starting to see that short-term demand starting to pick up a little bit, and that's definitely reflected in the price. That could due to just the summer weather starting to shape up a little bit. We have hot, dry weather coming into the next 7-day forecast or so. So we expect that demand to stick around, especially with the grilling season on full underway. So we haven't had that for quite some time. The last couple of weeks, it's been okay, but now we're starting to see that. The biggest factor that we're looking at is that 5-year average for the weights. We have to drop off in a 5-year average. It's about 854 versus 863 or so. So that's something that we're keeping an eye on. But on a technical level, that 107 area for the August, that's definitely something that we're going to keep in mind on. We're going to remain bullish above that 107 line.
All right, over in the lean hog complex here today, things have been on a little bit of a weak side also for that front month there, but the August is the next, for all intents and purposes, our new front month. It's up 138, the October up 183. Was the trade disappointed by not seeing China buying pork yesterday in the export sales?
Yes and no. So if you look at just the export sales yesterday, that was a little bit off. That's why you had a little bit of a pressure down on it. But if you look at the overall, China's still buying U.S. pork. I mean, they're roughly running above average weekly exports, just because we had a little bit of drop off. But as we've been talking for the last few weeks, it was either, we have exports there or they're not.
Mm-hmm.
It seems like every other week that they're just either backing off or they're importing more. So that's right now, as far as the trend goes, I mean, that's just following suit right now.
Oh.
But that African swine fever, I mean, it's still rampant. They still need it, and they continue to buy even with these high tariffs.
All right, Scott, thanks a lot. Hope you have a good rest of the afternoon. Scott Geekus, Walsh Trading at the CME Group in Chicago.